online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M+ Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M+ Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the Edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M+ Global's real-time market data. Now, it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You're now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M+ Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market. Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market. Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M Plus Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M Plus Global today and take control of all your global investments right at your fingertips. To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Hello, our friends on YouTube and also Facebook. Good evening, everyone. So welcome to today's M Plus Global live stream. So before we start, let me introduce myself. My name is Hui from M Plus Online Research Team. So I am your host today. Have you had your dinner? You can share with us on the chat box there. I hope you have you have had your dinner, and if you are not, just grab your dinner and sit back and relax with us. So we will do this live stream every day. We have been doing this live stream every day since last few weeks. So tomorrow we will have this live stream as well from 9 a.m. to 11 a.m. and also 7 to 9 p.m. So we have launched our M Plus Global app since 6th of April. You can now trade with us the US and also Hong Kong stocks. Just a reminder, we have a campaign going on now. When you open an account with M Plus Global and deposit a minimum of 10,000 ringgit, you can get a 5 Grab share. And not only that, you can also entitle to 30 days of level 1 live quote for US and also Hong Kong stock market, as well as a 90-day live quote for Nasdaq. So we are the first Malaysian stockbroker offering the Nasdaq real-time data. So I believe you won't want to miss this opportunity. So you just scan the QR code here, which will be on the screen. This side of the screen to download our M Plus Global apps and open an account with us. So what we have for today? Today we are so privileged to have our M Plus Online Head of Research, Loui Low, to share with us about the second quarter outlook for Malaysian and also US stock market. So without further ado, let's welcome our Head of Research, Loui Low. So we'll transit to a video first, and then after that, you can hear from our Head of Research, Loui Low here.
Hi, good evening everyone. Welcome to our M Plus Global live stream, and today we will bring you through the second quarter market outlook. My name is Loui, and I'll be with you and sharing insights on the opportunities in a downturn market. I'm pretty sure that right now a lot of people are asking, whether is there any recession, whether the global growth is it intact or not, and whether the China is it on a recovery path. So perhaps we can actually understand this from more data points later on. And also, don't forget, tonight is at 8:30 p.m. we will have the US GDP data, and that may actually give us some light or some guidance towards what is the anticipation of the Federal Reserve meeting in the next week, because that is very important. And when FOMC meeting comes up with their decision during whether is it more hawkish or more dovish tone, I think that is very important for us to decide where to put our money into which sector and what sort of asset classes that we can use to engage with the market. Okay, so without further ado, I think before we go into the market outlook slides, just to share with you that you can actually download our M Plus Online and M Plus Global on Google Play Store and Apple Store or Huawei Gallery. We have weekly bites which we will update in the mid-week on market updates, things like whether market is going up or down, or what sort of catalysts that we have, and what sort of opportunities that we have for that particular week. And also check out our M Plus Online and M Plus Global app. These are very important for you all to understand more about some of the analyst insights that we have provided so far. And also, if you need more help, you can contact us at support@mplusonline.com.my, and also chat with us through the Facebook or call in at 1-300-221-233. Okay. So before we start, I think we need to do some disclaimer. These are my own content and also for my own references, and also this can be also try not to use this as your buy or sell call. Please do your own due diligence before you buy into any of the recommended stocks or sectors in this market outlook. Yeah. Okay. So agenda for today, I think we will go through some of the data points from China side, from the US side, and also from the Malaysia side. And I think we would be talking about more towards what sort of market direction that we have based on all these data points, because China is definitely going into a recovery after the reopening theme. They are definitely going into recovery projection going forward in the economic activities. But on the other hand, in the US side, we have been seeing a lot of tackling of this inflationary pressures issue and all this US banking crisis. What sort of outlook that we have in the US? And certainly coming back to Malaysia on our local front, definitely we are looking into a slightly more positive tone, despite our KLCR has been hammered down quite severely throughout the past week. Due to the renewed concern on the banking sector from the US. Even our stocks, banks are actually in the being sold down over the past few trading days. So what sort of things that we can actually look out for during this second quarter in Malaysia? So those are the things that we will be sharing in the market review and also strategy part. Okay. So let's start with just to recap on the whole situation here. Since 2020, we have the COVID-19 virus, and there was a lockdown, and all this supply chain disruption has been, hitting all the economies in the world, and therefore we have endured a painful 2.5 years period before managed to recover right now. I think most of the economies out there are charging higher. In Malaysia side, we have about more than 8% of this GDP growth in 2022. So I think in Malaysia side, we are quite secured that we are more protected in a way that we have a better recovery growth path as compared to other nations. In the US, I think their GDP has been coming up, but it is still within the range of, within the lower bound of this over the past few years kind of growth rate. So I think in the US, it might be more concerning for the US economies to stay afloat at this current moment after even after the US banking crisis. People are actually speculating that maybe the US recession can actually can be seen in the next 12 to 18 months. Okay, so maybe you can also actually comment in the comment section to say that whether do you think the US will go into recession or not in the next 2 quarters. Maybe you can comment in the comment section. Okay. Let's hear from the crowd as well. I think more importantly is we want to do some interactions here. We want to understand whether you think the US will go into recession or not. That is very important. Okay. So some of the positive factors I just want to paint out here is that we have gone through the COVID-19 the COVID-19 situation, pandemic, and definitely it has eased substantially, okay? And if you are thinking about the positive growth of GDP, yes, we do have that. China has that. A lot of countries has that. And also US GDP has actually recovered slightly last quarter. So let's see this tonight's number, whether is it better off or is it weaker off. The consensus I think is 2.6, 2.7. I'm not too sure about the numbers yet. And also, yeah, we have this stronger spending following the reopening. Why do I say this? Is because if we look into, later on I'll show you one chart that is very amazing chart. Maybe everyone would know about that brand. Okay, so just to give you some insights towards what I've shared in this slide itself, the positive factors, these are some of the details. So concluding the end of the pandemic, so we can see that throughout the past few months, that even though there is a lot of new variants coming in that hit Malaysia right now as well, we have been quite manageable in terms of the COVID cases. So I think this COVID pandemic era seems like to be ending very, very soon, or maybe we can say that it has turned into an endemic, and therefore we need not to worry about it anymore because it is very manageable. It is something like a flu. So seems like if this is the case, then therefore we can see a lot more recovery in terms of all the other areas. The first that we can actually notice is definitely the arrivals of tourists from various parts of the world. But I just want to show you the Hong Kong stats. If you look into Hong Kong total visitor arrivals, it has just started to turn back into pre-pandemic level. But what this is interesting because if you are using Malaysia's data, if you recall what happened after we have reopened, our Asia, aviation-related stocks has actually been moving up. So what if you can actually take this opportunity to look at the Hong Kong tourism side or gaming or aviation in the Hong Kong, Hong Kong Stocks Exchange, then perhaps you can use our model in Malaysia to chart the potential opportunities in the Hong Kong. So I think I want to bring this out is because this might be just a start for Hong Kong and for their tourism related counters. So that is just what I want to mention here. Okay, so looking at this graph or this chart in terms of our Malaysia tourist arrival, you can see that it is definitely on a growing path. But soon after, all this reopening since last year April, right now there is another factor that could see more, robust tourist arrival. Why is it so? Because since January, we have the China reopening their borders, and that should help with China tourists coming into Malaysia. So normally they would contribute around 200 to 300,000, but in Malaysia Tourism Board, they say that they are targeting about 5 million tourists this year. So I think that is more than the usual 200 to 300K tourist arrivals per month. So that would come up to be a 400 to 450 travelers into Malaysia from China side. So I think this is a very important thing to take note because the spending part is very interesting. If you look into why do I say the spending has increased, is that even this LVMH Louis Vuitton has actually went up to all-time high. Given the earnings has been going up higher despite after the COVID year, it has been going up strongly and stronger this year, and also in 2022, their share price has even gone into a very, very strong trajectory. So what I mean here is that overall, what I can see from the positive side of things is that spending is still continuing, although we are suffering from some of the inflationary pressure and things like that, but the ultimate earnings that translate to corporate earnings is there. So which means that if we think about this as the spending power from China or after the reopening of economic activities, then this should translate to this is consumer discretionary sector. Even this sector has been going up higher and higher. So what it means is that we have an opportunity to look out for this kind of asset classes to put our money in, or this category, which means that consumers' discretionary can be also benefited after the reopening of China. So that is what I want to mention, and I believe that this positive spending or positive catalyst in the consumer discretionary can also be translated to other consumer sectors, opportunities. Yeah. So looking at our Malaysia side, coming back to Malaysia, what do we see in our GDP is that we are on a growing path since 2020. We have gone into negative 5.5%, then back to 3.1, and then go back up to 8.7. So although a lot of people can say it is the so-called low base effect, and also we are heading into some good recovery, but as per normal days, we should be charting about 4 to 5% growth on a consistent basis. So if this is quite similar to 1998, then we might be having some dip and then sideways movements. So if this is what we are anticipating, then perhaps KLCI might go down lower before going higher. But what I'm saying here is that all this spending will also be good because of the pent-up demand. After the so-called pandemic, we have the reopening of China, and don't forget that China has not been factored into last year's GDP, because the whole of last year we did not see any China receipts, tourist receipts. So what I'm thinking here is that this year the wild card is definitely from the China side, and therefore we should not have some dip, or we should be saying that I think 4 to 5% of GDP growth is should be the way to go. Yeah. Okay, so to China side, what do we see in the China side of things? After 2020, the growth was about 2.2%. It went up to 8.4, low base effect. 2022, it charted a 3% growth. Going forward, what are the expectation is about 4.8 towards 5.5%. So generally speaking, China side is also expected to be growing. Okay. So we have talked about the positive catalyst, but what about negative catalyst, and what sort of global challenges that we have right now is definitely on the slowing US economy. Because if we talk about the recent banking crisis, that is the most damaging towards the economic activities so far, because that people are trying to project something potentially like the 2008 kind of Lehman Brothers kind of collapse. So what I want to say here is that so far some of the banks that has been coming out with results has been quite decent. Just that a few banks that has been down doesn't mean the whole banking sector has this issue. So right now, since that we are still waiting for the GDP numbers, perhaps we can go into other things like heightened interest rate and inflation. This is not many people have been talking about, and also a strong USD as compared to pre-pandemic. Although it is, sometimes strong is actually good for us exporters like Malaysia, but actually strong USD can also be dampening the earnings for the US corporates, because US corporates is also a global company such as Meta, Apple. Okay, so as long as they have strong USD, it doesn't bode well for their exports, and that may come in as a lower income or lower revenue for them, and that may affect their earnings. And don't forget that the interest rate is actually a wild card for the US as well. Why do I say so? It's because throughout the past, I think 5 to 10 years, we did not experience all these so-called high interest rate environment. They are living, US nation is undergoing a zero interest rate policy, right? So it means that they can have a lot of money but without paying a high repayment. Okay, so that is what I'm trying to point out here. So if they are too comfortable during the time, perhaps some of the corporates need to rethink their management of their borrowings going forward, because right now they need to pay 4 to 5% of repayment, in terms of that. So that may contribute to the finance cost, and finance cost is be one line above the earnings net income. So which means that they need to pay the finance cost, then comes to in order to come to their earnings. So it means that if the company is paying more in terms of the finance cost, definitely that would dampen their earning. So what I'm trying to say here is that this could be some of the challenges that the US corporates are actually facing, and that could actually point towards a potential slowing of economy. Okay, then later on I will talk about the inverted yield curve. Yeah. Okay, so throughout these global challenges, we also understand that the global CPI numbers are actually on the rise earlier on, but it has hit some sort of peak. So most of the countries' CPI data has actually peaked over the past, I think, maybe 4 to 5 months period, and then it starts to slow down. And if you notice, this kind of slowdown is actually okay because the month-on-month increase actually is quite per normal basis. But one thing that you have to take note is that these numbers can actually be elevated and also higher than what we have seen in 2018. So 2018 numbers is about 2%, and that is what the Federal Reserve inflation target is right now. So which means that if we are looking at CPI numbers in terms of US, right now it's still about 5, and they need to go down to 2, which means that they need to take some time in order to hit that numbers. Okay, hit that number. So again, we are seeing some peaking of CPI data, and if the next 1 to 2 quarters we can see this 5% coming off towards 2%, then perhaps this will be sort of like end of story for the Federal Reserve to increase their interest rate, because this month is also, next week, we are going to anticipate another 25 basis point of increment in terms of the interest rate. So what it means right now is that they are battling the inflationary pressure, and therefore they are trying to use the interest rate going higher to tame down the demand, and so to tame down the consumer price index, so to tame down the CPI numbers. So what does the consensus think about this Federal Reserve interest rate hike, or their tone in terms of whether they are into more hawkish tone or more dovish tone? That is very, very important. So throughout the past few quarters, we have seen a very strong trajectory in terms of this interest rate hike movements. But right now, you can see during October, what I snapshot here is during October, the consensus think that it should peak during March, okay, 4.65. And then later on, it should go flat towards the next few rounds of meeting. And during December, the consensus think that there is still room to increase and stop near June, okay, or May to June period. So which means that again, they are anticipating the hike would stop near towards May to June. So which means it's around this area of time. And then the last that I've captured from the April, this month, is also saying the same thing. The peak will be around this 5%, and also during May and also June. So what it means here is that the Federal Reserve, based on the tone that the Federal Reserve given out to the market consensus is looking at the peak of the interest rate upcycle will end in May to June, but also based on data-driven kind of analysis. But if the market already thinks that it is sort of like peaking in the May to June, therefore from this point onwards, it's either staying flat for the interest rate or coming down for the interest rate. So that is two things. My view is that this year we should not be looking at rate cut, okay? Not looking at rate cut, but at least the rate should be elevated as of this juncture. And I think the rate cut may happen only in 2024. So that is my view for the time being. So overall, I think as long as we are still having some growth in the GDP, the CPI numbers are coming down, then they can maintain this interest rate at this level. Okay. So this is from just now that one is from consensus, which means that the market, what does the market think about Federal Reserve? In terms of Federal Reserve dot plot, this is a viewpoint from the Federal Reserve. What do they suggest is that they suggest that in 2023, this should be the highest point of things, which is near towards 5%. Going forward, it should be around 4 point something percent, and going forward into 2025, it may go down to 3%. So what I'm thinking here is that overall, we are expecting this interest rate upcycle to be peaking right now and may go down throughout time. Okay, another thing that Federal Reserve is actually looking at is also the quantitative tightening. So what it means that by over the past years is that they have been flushing the system with a lot of abundance of liquidity, and right now they are trying to close the tap. So which means that right now, you know, when you have a pool that has a lot of water in it, definitely it is fun to play, right? But if the pool is having lesser and lesser water, so I think a lot of funds, a lot of fun activity cannot be played within the swimming pool. So that is what I want to mention here. They are flushing a lot throughout the past 5 to 10 years, and right now they are trying to close the tap. So which means that they might, liquidity might be drying up, but it's not really dry up straight away. It's a staggered process. But this means that the upside of the market may not be so attractive as compared to the past 10 years. Okay, so that is one point that I want to bring out to you on the Federal Reserve balance sheet. But recently, yes, they have been spiking up because of the banking crisis. So Federal Reserve has been lending out money to those that has been in some trouble in terms of their liquidity. So this is some of the things that Federal Reserve is providing some liquidity to some of the banks. Okay. So just now, one of the global challenges that I mentioned is about the inverted yield curve. So right now, I just want to try to point out to you what is inverted yield curve. Inverted yield curve means that the long-term yield is actually lower than the short-term yield. And why does that happen? Is because when you know that yield is actually inverse of the price, the bond price. So if they think that the long-term outlook is better, they will surely buy into long-term bonds, and therefore they push the yield lower. And so that is the whole idea here. They buy into long-term, they sell the short-term bonds because they think that the near-term outlook might be slightly not so exciting. So that's why they sell the short-term bonds. So that's why it comes up with this yield curve. And normally when inverted yield curves happen in the negative territory, which means that there is a very, very good chance that within the next 12 to 18 months, we might be going into a recession mode. So this is US bond. Therefore, this might be also signaling that perhaps in the next 12 to 18 months, based on statistics, that the economy might go into some recession. So during 2006, 2007, you can see this is the inverted yield curve inversion happened during this time. And what happened in 2008? Economy recession. So this is some of the ideas that maybe we can put some of the cautious tone into trading in the stock market. We try to be very flexible in terms of our trading pattern. So in 2019, same thing happens. We have a blip, 2019, another inverted yield curve happened, and we got into a COVID-19 induced recession. Okay, so that happened in 2020. So this round is like we have a blip in maybe March to April last year, and we have so-called technical recession recently in the US, but right now there are a lot more times that this yield curve inversion happens throughout July until right now. Even right now, it is still in the inverted yield curve position. So I just want to ask again, what are your thoughts? Are you thinking? Do you think that the economy in the US will go into recession, or is it will continue to go up higher, good growth and things like that? So put in your thoughts into the comment section. So this is the part whereby we really don't know what should be what should we expect within this particular period but at least all these data points are pointing to at least we have some, we should be cautious in terms of how we trade, and our trading pattern should be adjust accordingly to the market right now. Okay. So yeah, in COVID year 2020, that was the downfall of GDP, and this round near towards, I think, in 2022, also there are 2 quarters that has been seen with this negative period of the GDP. So this was during 2008, the recession after the inverted yield curve. So based on, I mean, I've charted a few rounds of I think about 20 years of GDP cross with as compared to the inverted yield curve position. It actually have some 60 to 70% of success rate, whereby once we are in the inverted yield curve position, there is a very, very good chance that within the next 6 to 12 to 18 months period, that the market or the economic activities can go into a contraction mode. Okay, so far so good. I guess hopefully that you are staying still in digesting what I have mentioned earlier on. And if you like this video, you can also share this out to your friends, and hope they can actually understand more about what is to anticipate in the second quarter market outlook. Yeah. Okay, so this is not what I say. I am just printing some screenshot the Bloomberg, and also we have in the Bloomberg itself showed that the probability of recession has went up to 65%. When this was in 2020, it went up to near to 100%. Yeah, so that time people say that we are definitely going into recession. But this round, since March or April last year, 2022, they have been slowly creeping up from 20%, 40% to 65% right now. So, and if you notice the consensus at this current moment, they are actually looking at the range of growth about 1.2% for 2023, 0.8% for 2024, and also 2% for 2025. But what I think about this is actually not too convincing for me to say that they are going into a strong growth going forward. Why do I say so? Is because if you check from 2016 onwards, the lowest point is actually 1.7. Yeah. So if you want to get 1.7, or you want to get 2.1, 2.2, 2.9, these kind of figures, your growth must be a lot more stronger. Okay. So if you are having this projection of by consensus to say that it is about 1.2, 0.8. very easy they can have some error. I mean, margin error is very, very small. The buffer is very small, and if one quarter they go into a dip like maybe 2 to 3%, I think these numbers has to go down. Yeah. So what I'm trying to say here is that the consensus of the next 2 years of growth is near towards 1%. Yeah, and therefore the margin of error is very very narrow, and it's very easy for them to go wrong in any of the quarters, and that may affect the whole consensus, and this may go into a negative position. So that's what I'm trying to say here. So but overall, I'm seeing some good potential within some of the thematic theme, such as consumer discretionary, because of the wild card from China and the reopening activities, and certainly the recent ChatGPT AI theme that has boosted some of the demand back into the technology stock. So I guess that is part of the so-called positive catalyst, at least for this juncture. So another view to what we are looking right now in the US is certainly a lot of companies in US is actually beating the consensus and expectation. What it means here is that if the company is being covered by analysts, and if the earnings is higher than what analysts expectation, then it is considered as beating the forecast. So within S&P 500 itself, there are 188 companies that has produced their recent financial results, and more than 80% of them has beat forecast. So one way to see is that this is good, this is optimistic and yeah, very positive. But another view is that because over the past few quarters they have been slashing the consensus, so which means the analyst thinks that this company maybe not so may not be earning that much in the next few quarters. Therefore, they put their expectation lower for the next few quarters. And once the company earnings is reported, then they say, oh yeah, it beats the earning. So beating earnings is a good thing, but whether is the analysts out there are too pessimistic about their earnings, therefore they slash too much and let the company beat their earnings. So that is another question that you have to ask. So always I have a systematic way to drill down to this. What I am thinking in mind is that be it beating or not beating, you must have growth in terms of the growth trajectory in terms of your earnings. So what it means here is that even if you are beating the forecast, you also must beat at least one quarter before that. So which means that if this quarter you are making $1 in terms of your earnings, next quarter you make sure that you make 1.1, 1.2, 1.5. Okay, I don't want that those companies that last quarter they make $1 and this quarter they make 0.8, but because 0.8 is higher than the consensus number of 0.5, therefore they beat consensus but still lower than the previous quarter. So that is what I think investors have to take note on, this very systematic approach of things. Not to say that earnings beat is good, but also having some growth in the earnings on Q-on-Q basis is much more important. Yeah, because if there is no growth in terms of the earnings, it means that it is a downward path in terms of the Q-on-Q perspective. Then it's not so good for my understanding of where is the recovery coming from. Yeah. So if this quarter is better than last quarter and they can beat the expectation, that is a good company. So that Q-on-Q growth is very important to say that this might be the turnaround of most of the companies or some of the companies out there. Okay, so dollar index has been going up strongly towards the 112 level, but recently it has been dropping back towards the 101 zone. I think it should be on this path or on this range of consolidation because this is in line with the less hawkish, right? If the Federal Reserve is going on the less hawkish, or at least to pause the interest rate as for 2023, then the dollar index should be hovering just sideways. If they're going to rate cut position, then people will sell US dollar, then the US dollar index will go down. So for now, what I'm thinking here is that this should be the last cycle, last round of the interest rate upcycle, and therefore it should be holding on, maybe a pause for the rest of the year. And this dollar index should stay about 100 zone at least for the near to mid-term. Okay, another thing that people always look at is the commodity index, and commodity index is actually something to ponder because if sometimes people view this as an inflationary indicator as well, because when things are getting more expensive, Bloomberg commodity index is going higher and higher, means that most of the commodities out there are pricing, the raw material price is getting higher, and CPI numbers can go higher as well. But another viewpoint to it is that why does the share price or this commodity index goes up? Because there is scarcity. It is during that time. This is during the war period, right? The Ukraine-Russia tension happened during February 2022. So during the time, oil prices went up, gold prices went up. Okay, why does this thing goes up? Is because people think that it is crude oil may be lower production going forward, and therefore people continue to buy higher and higher, and therefore it jack up the commodity index. So right now, if you think that there is more demand, then you go up. But right now, if you think that maybe the demand is lower, therefore they are selling off the commodity index, what does it mean? It also means that it can mean also that the people are not willing to buy so much of all these things. It may be also because of demand low, or maybe we are facing some business issues that they don't want to buy further. And so people will think that, yeah, commodity index is also something to relate to recession. So going up can be bad for the consumer price index, because you need to pay more things for your steel, for your gold, for your crude oil, and that has been seen, in the Euro, UK, and also US, the inflationary numbers goes up. So this goes down, but we think that people are pricing in a recession fear, therefore it is going down. It is the same thing as the Brent oil prices, and it has been turning into sideways despite the OPEC Plus has reduced their supply. Okay, during that surprise move, we thought that this crude oil price can actually sustain and break through the 88 US dollar, but it did not. And the recent weeks, we are seeing more recessionary fear, cautious tone, banking crisis resurfacing, and this has contributed to crude oil being sold down as well. So it is a very mixed market right now, and if we want to put it together, it might be pointing towards potentially recessionary fears, and therefore this is definitely the wild card that we don't know when will happen and what is the contributor to this recession, or market crash. What is the contributor? So what I can think of right now is that more towards negative side of things, but at the same time there will be always opportunities in this downturn. Yeah. Same goes to these CPO prices. Despite reopening activities in China, we are still seeing that CPO going to downtrend move, didn't break through the 4425 level. And I think this is also another similar story towards the recessionary fear, or perhaps Indonesia's side has flushed the market with more and more of this CPO, and therefore this CPO has been going in the downward mode and cannot really surpass the 4425 level. And I think for the current moment, about 3005, 3004 level, I think it's still quite benefiting towards all the planters. So need not to worry about planters. Planters can break even their break-even level is quite low, about maybe 1,005, 1,009 for some of the companies. So I think that should be the range that we are looking at for break-even point. But for the time being, I think the whole idea here is that if the commodity prices is going down, which means that perhaps demand is low, and that what sort of catalyst is the investors is actually pricing in? It could be the recession, okay, or slowdown of business. Hopefully there won't be a hard landing for most of the big economies out there. Okay, another data point I want to also point out that may be also pointing towards a recessionary period is the gold. Okay, gold is actually pushing to all-time high zone, which is near towards the 2073 level. I think that is the area whereby if really is surged through the roof, then what sort of things that you can actually look for will be defensive nature of sectors, and also a commodity like this. You can always expose yourself into gold related products by using an ETF. So we have M Plus Global app inside. You can search for GLD or GLDM for exposure into gold. Yeah. Okay. So I think these are some of the points that I want to really give out to say that sometimes we really need to be very cautious, but at the same time, when there is during this caution period, what should we be investing in? Okay, so before we go into what is the strategy, what is the market review, we have to also understand how is the market reacting so far. So in the global indices point of view, from the year-to-date basis, we can actually note that most of the US major indices and also the Kospi index is actually heading higher, and the FBM KLCI is actually in the negative territory. Okay, so just that to take note. And what I'm thinking here is that in the US is always we are referring to technology companies, we are referring to biggest corporates in the world, and they are still having some good growth. So which means that we can still rely and trade within the US stocks as of this juncture. And HSI has actually just rebounded year-to-date basis above zero. So what I'm trying to say here is that the market is actually taking the recent, U.S. bank crisis, recessionary fear. So that's why over the past 2 weeks it has been dropping. But going forward, the theme that we need to select is very important, and I can you need to diversify in a way to outbeat the market. Okay, so later on I will share with you some approach that I think is very important, a very systematic approach that you can actually apply straight away in the US market or even in the in the Hong Kong market. So when you buy into market, you would think that buying into stock markets, what should you be thinking? First of all, I think is PE ratio. This is very important because it will tell you that whether you are buying it more expensive or is it on a discount basis. So at this current moment, S&P 500 is on a very fairly value point of view because the current PE is about 19.4 and the long-term 10-year PE is about 20.3. So there could be another worry is that the pullback of the earnings may also affect the PE going forward. Okay, so perhaps the earnings season, once it is done, then we can actually do a review. How many actually beat the market? How many actually grew Q on Q? That is more important. Okay. So another thing that you have to take note is that Malaysia side is more towards a discounted position right now. It's about 14.8 times PE versus 10-year PE about 17.5. So I think it is still on the discount side. But don't forget that we have the wild card of China reopening, and therefore that should give us some advantage in terms of the GDP growth this year, and hopefully that will attract more investors, especially during after our GE15, we have some steady political environment that should allow investors to join in to Malaysia's investment. Okay. So on the US dollar MYR chart, I think this is very important as well because this will dictate how you can invest in Malaysia based on this price chart itself. So when Malaysian ringgit, this chart is going up higher and higher, which means that it is on a weakening bias. So which means that if right now it's 4.46, when it goes up to 4.7, although the chart is going up, our ringgit is actually on a weakening path. And if we are on a weakening path, therefore it is actually good for the exporters. Okay, so that is one thing you can take out from this chart to straight away implement into your portfolio. So when it's getting stronger and stronger, where should you put the money in? It's definitely the local business or local banks itself. So that is how you can utilize this chart in order for you to trade. Trade your Malaysian counters. Okay, last section here is that what strategy should we deploy? Is it short-term or is it a long-term strategy? And I think that is one thing you can take away, whether you want to be a short-term trader or long-term trader, it depends on yourself. But for my approach, I've been using this approach over the past 3 quarters in Malaysian stock market. Basically is to look at their themes, make sure that they have Q on Q on year-on-year growth, and we select based on a basket of stocks and we rebalance the basket of stock every quarter. So during the third quarter 2022, these are some of the stocks that we have selected, and it has given us a very, very handsome return during that particular quarter. And following quarter, we also use back the same methodology. As long as there are good growth and also uptrend counters, we will put that into the stock selection, and therefore they have been in. So for fourth quarter, these are the 13 counters that we have selected. It gives us an average return about 6.8%. And also during first quarter 2023, these are the stocks that we have selected, and it has given us some returns about 5.3%. So this methodology has been used for 3 quarters, and this quarter itself, we also have our strategy to say that, since that our political environment is quite stable after G15, unity government has been formed, and recently our PM has went to China, and he has attracted more than 170 billion of investment via 19 MOUs, and that is a very good sign. Although MOUs can cancel any time, but at least it shows interest that the China side is willing to put in some investment into Malaysia, and that should give us, get the ball rolling for this year. And I think budget 2023 is also very important during this period of time. What sort of catalyst that we can look out for budget 2023 is that the green energy related, the construction related, because development expenditure has been going up, and that should impact positively on the construction and building material segment. And therefore, one of the points that I want to bring out is the building material segment should be on a potential growing path. And don't forget about the wild card that I mentioned, the reopening of borders from China. That should attract more tourists coming in. And don't forget about this, healthcare tourism is also something to ponder, because throughout that COVID pandemic period, not many people are willing to do operations or surgery outside of their country. And right now, this time whereby everything has opened up, and this might be another growth factor within Malaysia. And under this high interest rate environment, certainly net cash is very, very important. Okay. So this is how I select, counters based on the themes. I call it the factors, element, and theme kind of scoring method lah. So I want to be having some diversified portfolio. At the same time, I want to get into all the sectors that I've mentioned earlier on. So that's why it comes out as a basket of stocks to mitigate. Okay, so equal weighting in all these stocks to mitigate the risk of. So there is a diversification effect, and we are not solely into certain sectors. And out of all this, they are also in the uptrend tone. And best of all is that they have at least Q on Q or year on year growth in terms of their quarterly results. Perhaps net cash is add on plus point towards this. And so this is some of the sectors that I have been monitoring, and we have been putting into report since the start of April. So it has not been really generating too much out of the performance yet for the past 27 days of April, but at least one of the stocks has been outperforming most of the stocks out there. It is the Randhill. Okay, so talking about Randhill is that this is part of the utilities segment, and uncertain period will benefit all these utility sectors, and therefore that is also part of my selection of stocks. And so if we are diversified enough, and if we have some alpha within that basket of stock, it should mitigate some other risks of falling. Like Unicem just announced their result, and it has been negative, and therefore it has dropped further below 3 ringgit, but managed to recover back a bit. But overall, if you think of a basket of stock for every quarter and you rebalance it, I think it should be in a very good position to ride the trend at that point in time. So we have used this methodology for the past 3 quarters. This is the 4th quarter that we are using. Hopefully by end of June, we can actually let you see what is the results for the selection of stocks. Yeah. Okay. So since that we have launched our M+ Global, then we have been able to enjoy the exposure outside of Malaysia, Hong Kong, and also US. And these are some of the stocks that I think it has potential in terms of the Q-on-Q or year-on-year growth for their earnings. So earnings part is very important to take note. And secondly is that they are uptrend based on 50 MA, 150 and 200 day MA. So these are very important key. As long as they are in the uptrend tone and coupled with growing earnings, these two factors already can give you a solid methodology for your selection of stocks. And you can rebalance it, based on quarterly or monthly basis. It is up to you. And but this is some of the approach that I'm using, and I will select some top 10 market cap companies to view into. And these are some of the stocks that is under this category of growing earnings plus their uptrend, and so like Agricultural Bank, HSBC Holdings, Ping An Insurance. By the way, Ping An just announced their results, I think 2 days ago, or 1 day ago, and it is a very strong results, and therefore today it has been surging higher above 55 Hong Kong dollar. China Telecom, Bank of Communication, China CITIC Bank, Semiconductor Manufacturing, these are under the So you can see that within the top 10 stocks, they are quite diversified in a way. You have banks, you have insurance, you have telco, you have some technology stocks, you have some machinery related, you have some telco as well. So I think telco, banks, insurance, those are very safe names, and they are in the uptrend zone. They are having growth in terms of their earnings. So I think it is some sort well protected in a way. Their fundamentals, they are also having some momentum in it. Okay, so for the US side, I am also using the same methodology. At least they have some growing earnings. They have some uptrend characteristic in terms of SMA 50, 150, and 200. And you can select these top 10 companies up from this list of when they have fulfilled first and second criteria. You can select the top 10 market cap companies. And these are some of the companies. And we can see that it's quite well diversified when we select these top 10 counters. Like they have financial services, banks, they have consumer staples, pharmaceutical, software, pharmaceuticals, and then we have hotel, restaurant, and leisure. This is very important during or after the reopening of China. This might be the case whereby people are chasing higher and higher. Therefore, it is an uptrend counter. But at the same time, they are also having some growing in their earnings. And also oil and gas, consumable fuels, and also chemical products as well. So I think if you want to use this as a basket, also all right, because it is some sort of diversified approach, and they are having good, strong earnings. I mean, at least there is some growth in terms of Q-on-Q or year-on-year kind of momentum, and also their trend are in the uptrend tone. Okay, so so that is the whole session of the market outlook. I'm providing you some insights about what is my methodology of selecting stocks, and how you as a retailer can actually craft your own portfolio based on my own set of criteria, or you can use my set of criteria or my set of stocks, but use it for your reference, but make sure that you have to do your homework before you put your money into all these companies. Yeah. So in overall, to sum up what I want to comment about the market outlook in second quarter, it is definitely a very challenging quarter after the COVID-19 era, because during COVID-19 we have all the earnings goes down and it has come up from a low base. But right now is after 1 or 2 years after the earnings, so the earnings should also impute something like the high inflationary pressure. Will they dampen the earnings? Secondly, zero interest rate policy was very far away from us right now, because right now we are in the interest rate upcycle, and US is very high in terms of interest rate. Will that cripple their cash flow, and finance cost is going higher? Will that make their earnings lower? So that is all the things that you have to take note, and try to avoid those companies that on the Q-on-Q basis they are on the dropping path of earnings. I think those are the red flags that you can actually monitor and pick up from the US stocks. So my methodology is that earnings must be Q-on-Q higher or year-on-year higher. It depends on your preference, and it must be uptrend counter. Okay, so this will actually put away a lot of negatives. So-called during that time it is negative trend. It will already weed it out. Okay, and you can actually select those very, very good steady companies going forward. Okay, so that will be it. We will stay tuned, and we will be right back for the Q&A session, and you can also drop your comments, question into the comments section, and we will take it from there later on. Yeah, thank you.
How to buy Hong Kong and US stocks with M+ Global. First, you have to open an online trading account. It only takes 5 minutes to complete. Make sure to prepare your IC, bank account statement, and relevant documents. Launch the M+ Global app and enter your email or mobile number to register. Proceed to log in and choose Open Account. Select Market, Account Type, and fill in the required information. Then proceed to face verification and input your signature. Once that is done, your account registration is successful. Now, it is time to deposit funds into your account to start purchasing shares. With M+ Global, there is no need to exchange your cash deposits for foreign currency, and there is no transaction fees. Click Deposit and choose Online FPX to deposit quickly. It only takes 5 minutes to complete. Once the funds have been confirmed and submitted, the next page will indicate a successful deposit. If the transaction is indicated as under reviewing, kindly provide the additional details required. Once you have made your deposit, it's time to pick the stocks you would like to trade. Click Market and select the Hong Kong or US stock market. You can choose from over 10,000 stocks. Tap Sectors to view the best performing categories. Tap Top Stocks to filter stocks according to their percentage change in price. Tap Most Active to sort by volume and turnover. Found a stock you're interested in? Add it to your favorites immediately. You can also add to your watch list so you can check it anytime. Use the edit function to add or delete your selected stocks. Create groups to organize your stocks via drag and drop function. Stay on top of the market with M+ Global's real-time market data. Now it's time to start trading. You can search directly by the stock name or code. Choose whether to sell or buy, click Order Type and select Market to buy or sell at current market price, or select Limit to choose your price. Enter the share quantity and other information, then submit the order. How to check if your order has been executed? Just click on Trade Orders to check. If you want to modify the transaction price, just click on today's order to change it. Congratulations! You're now the proud owner of your first Hong Kong or US stock. Don't forget to subscribe to our YouTube channel.
M+ Global, winning the world.
The electric vehicle industry is now the talk of the town. Start trading EV stocks now with M+ Global. Driving an EV is no longer an unattainable dream, and in the future, the EV industry will be one of the fastest growing industries in the world. Many EV brands have also started to appear in Malaysia. Brands such as BYD, BMW, and Tesla have all entered the Malaysian market. Electric vehicles are not just vehicles. They have the ability to shape the lives of all Malaysians. With smart mobile living spaces and autonomous and comfortable driving experiences, this technological revolution will bring immense potential to the Malaysian market. Driven by policies and growing demand, the EV market has plenty of potential. So how do you, as a Malaysian investor, seize this once-in-a-lifetime opportunity to invest in EV stocks? Let's use the US stock Tesla as an example. First, enter the stock code TSLA or the stock name Tesla. Once you enter the stock details page, you will be able to see the live stock price. You can also view basic stock information such as market capitalization and technical trends. You can customize the time range for the share price movements from 1 day to 5 years, and even from the company's listing date up until now. From this chart, you can see that Tesla's share price has continued to rise from $21.80 to $182 per share over the past 5 years. It has risen more than 7 times during this period, far outperforming the broad market average. There is a wide range of stock analysis tools available to help you make a more comprehensive analysis, such as capital flows, the latest updates, and various fundamental indicators. This includes ROE, earnings performance, net profit margin, assets and liabilities data, and cash flow, and more to help you stay up to date with the latest company news. If you want to trade a stock, click Trade and enter the number of shares. Then click Buy or Sell to place your order. An order has been submitted message will be displayed once the order has been placed. When the order is matched, the transaction is now complete. With M+ Global, you can trade a variety of EV stocks in the US and Hong Kong stock markets, as well as diversified investment vehicles such as ETFs to help you better allocate your investments. There is also an information section. Click on Top News to stay informed with the latest investment trends at all times. Identifying investment opportunities is just the first step, but choosing a good trading platform is winning half the battle. Open an account with M+ Global today and take control of all your global investments right at your fingertips. To see more videos from M Plus Global, subscribe to our YouTube channel today.
M Plus Global, winning the world.
Hello guys, welcome back. I am Hui Yi and this is our wonderful and experienced Head of Research, Loui Low.
Yes, welcome back.
Yep, so first of all, thank you so much, Louis, for sharing your very valuable insights with us for the market outlook and also some of the stock picks. Yep, so if you have any questions or comments, you can just put in the chat box below or the comment section below and we will try our best to address them.
Okay, I saw a lot of comments from Zul. I think that one is, yeah, I think earlier on there are some questions and maybe you can take some from, how do you stock pick for US markets? Any pointer where to start? I think maybe you can first of all try to familiarize with the 30 counters or 500 counters on S&P 500 first. That is very important to understand, what sort of companies. But generally speaking, whatever maybe we are using like handphones or computers or Mac or the notebooks itself is already related to some of the brands out there. And if you notice, all these are actually in demand and the growth demand is there. So you can actually start from understanding some of these brands and also some of these consumer electronic products. What do they, what sort of hard disks they're using, what sort of chips they're using. So this can be one of the ways, to get started. Yeah. So another way is that you can actually always look for uptrend counters with earnings capability. Those are the stocks that I've been sharing, and some of the times we will be sharing some insights to our Telegram group as well, and that you can pick up all this information from Telegram, from us, or your dealers as well. I think to start off with, stock picking of US market, maybe as if you don't want to start off with the stock picking, you can always buy into a basket of stocks. We have this ETF, which we have presented the product itself on Tuesday. You can actually go back to the live stream replay and you can pick up more information about ETFs. But one ETF that I want to put out today perhaps is if we can look at the handphone, the mobile app.
Yeah,
a second.
get our operator to bring.
Yes. So if we are looking at this GLD, because I think this is very important, because right now the gold prices is actually heading towards all-time high. And just now I mentioned that in this quarter itself is challenging and we are undergoing some uncertainty period as well. So gold prices, when it goes up, the GLD ETF will also go up. Okay. So
maybe it's a long ETF.
Yes.
Okay.
And therefore you can actually look for this kind of opportunities. But at the same time, if you are looking at, let's say, Federal Reserve is going into potentially more hawkish, more dovish tone. Maybe they will stop the interest rate hike going forward. Then maybe people are anticipating that the interest rate is going down. Okay. Then you can pick technology counters. So if you don't know what to pick, maybe one of the ways is to look at ETF. You can look at NASDAQ ETF, like for instance QQQ. So that is NASDAQ ETF. So if you think that Federal Reserve is going to be more dovish and earnings can come in much better, stronger going forward, then this might have a chance to go up higher. So based on the indicators, seems like it's all right. The MA20, MA50, and also MA200 is pointing upwards. Just that right now it has some retracement mode. Okay, retracement mode. Perhaps maybe GDP data is not good and things like that. But overall, if you are bullish on certain sector, then you can straight away use ETF. And bear in mind, ETF is less off the stamp duty as well, so lower costs for you, and that is one good point that you can actually use. Okay, so I think ETF can be a good starter if you don't want to be too picky about stocks, what stocks you buy, because sometimes when we pick stocks, can be when we pick Apple, then Tesla run. We can pick Microsoft, then Google run and things like that. So it's very challenging for us to pick. If you are having that kind of challenges, then perhaps you can actually look into ETF. ETF is one of the good way to expose yourself straight away into the sector, and without a lot of reading up. Yeah, because you know that if the sector is good, and then you can enter. Yeah. Okay.
I see. Yeah, I think to sum up what Louis answered is that you can start with your lifestyle by monitoring what product and services you are using, so that you can invest in the stock you are familiar with. And other than that, you can also invest into like ETF, which comprise of a basket of stocks, so that you won't expose yourself to like too much of risk. Yeah, and then you can also follow us on our Telegram and also our social media, and to get more information from us. Right.
Yes, definitely. I think that is very important to keep yourself updated with our app, and also our app has a lot of information, be it whatever news that you can actually look for. You can I think you can actually pick up some good news, and also you can trade with using that news as well. So I think perhaps this is a very good, interesting, like for instance, you can search through the news segment. Then you can actually look into what sort of hot topic is there, and perhaps you can use that as one of the ideas generator. Because in US and Hong Kong, right, it is very interesting that they always react to very surprise news with a good gap up, and also, gap up or gap down, surprise move, gap up, gap down. But normally the legs are still a lot, which means that once they gap up, they can still run for some time before the retracement happens. But for some other stock exchanges, the stocks might not follow through so well. So hence, the news could be also sell on news kind of move. So which means that if you saw some of the news came out for some of the corporates, can be also sell into news. But for US side, I think the trading follow through interest can be much stronger than we expect. Yeah.
Oh, I got what you mean. You mean like if we catch the news on the first day and the price actually get up or down, we can actually follow the trend in the following days.
Yes. At least there will be some follow through towards that. That is what I observe in the US and also Hong Kong. Yeah. Yeah. Okay.
Let's see what other.
Maybe, Hui, do you have any questions for me? Throughout this session, I think it's a very long, it can be also quite dry, this session. And but again, these are some of the very good data sets that we can use in order to indicate whether we want to go for long, go for short, or go for a sideways ranging mode, what sort of investment product that we should use.
Yeah, I think maybe we can talk a little bit about the general market first.
Okay.
Like in a very dynamic market environment now, so there are always like very divergent voice in the market. Some opinions is actually believe that the stock market is rebounding in the post-pandemic era. So if the market predicted this will be the final round for the US Federal Reserve to actually increase their interest rate, so would you say the market has already priced in this event, the interest rate high, and then moving forward it will be a very positive environment and very good opportunity to enter the market?
Yeah, so before I talk about this, I think we also should note that market is always trading ahead of that event. So which means that perhaps right now, based on the consensus, since October, they are already mentioning about May and also June as the timeline whereby Federal Reserve will, stay put in terms of the interest rate.
Not so aggressive.
Yeah, not so aggressive anymore.
Okay.
And therefore, this was noticed much earlier, right? So therefore, the rebound happens maybe during November. Then after that, China reopening, then until right now, April. So it's like a 6 months ahead kind of approach already. So if right now they already know that they are, holding on towards their interest rate right now, and if there is no dovish tone coming in, which means that the market may just continue sideways right now until there is a signal to say that there is a rate cut. Then perhaps the market can run further. Yeah, is that correct? Is that what you?
Yes. That's what I would ask.
Yeah, and also, but that comes in only if GDP can still grow. US GDP can still grow.
Oh, okay.
Yeah.
Which will be released later
Yeah.
at 8:30.
Yes, correct.
Okay,
Yeah.
let's see. Yeah, let's see if we have that.
Yep. So I think that is very important because if we are taking the stance of saying that Federal Reserve is going to go for a rate cut, then surely, I mean, that is a good sign for market to cheer, because they would cheer and they would say that, when interest rate is up, it's bad for the tech sector. But right now, interest rate is down, so therefore, the whole, Wall Street is going to cheer with a very good upward trend. But again, comes with a GDP, US GDP must be at a growing path. Secondly, that most of the stocks should be also growing in terms of their earnings, which this year, which is quite hard for us to predict, because this is the first year, full-blown year, that we are in the interest rate upcycle environment of US corporates.
Yes. For the second point about the company's earning, you mentioned just now around like 78 or 80%
Yes.
of the company S&P 500 have actually achieved, the expectation of the market, right?
Yes.
So is it a good sign for them?
Definitely it's a good sign. But just now I have also pointed out that maybe is that the analyst has slashed too much of their earnings expectation. So for instance, that maybe the growth is not as strong, so they have slashed the expectation to maybe 1 back to maybe 0.5, and then they let them beat. They let the company produce the results, and if the company produces the results and beating the 0.5, it is a good sign. But again, from $1 back to the 0.8 earnings is a declining trend. So what I mean here is that beating the expectation is good, but at the same time, you must also compare with the previous quarter to make sure that there is some growth in it, or at least a flat means that they did not decline that much. But to me, if they are flat, is also a decline, because if they did not improve, means that they are declining. Yeah.
Okay. This is like under the circumstances, the market is like still uptrend move. Okay. So on the other hand, there are also those who predict like recession. So one term related to recession, just now you mentioned during your presentation, is like inverted yield curve.
Yes.
Could you put in layman term, like what does inverted yield curve actually mean?
Okay. Inverted yield curve is very interesting, and I try my best to put it in layman terms. Sometimes I also cannot pull it through, pull it off. Okay, but again, inverted a yield curve is comprises of two things. One is a short-term bond and also long-term bond.
Okay.
So when the long-term bond is getting lower yield than the short-term bond.
Okay.
Okay, so that is the invert yield curve. Okay. So why does the long-term bond yield can go down below this short-term bond yield? So you have to understand another thing. It's called the inverse relationship on the bond price versus the bond yield. Okay. So it's very, very tough. But again, it's inverse relationship. So which means that when people think that longer term outlook is better, they will start buying into long-term bonds to enjoy the growth of a longer term period. And when a lot of people buy into that long-term bond yield, the price goes up and the yield, yes. So when a lot of people would be buying into the long-term bond yield, and then the long-term bond price, and then the yield comes down lower than the near term.
Okay.
So which means that they are more bullish in terms of the longer term outlook, but they are more negative on the shorter term outlook. So that's why that happens. Okay. So again, you must understand two concepts. One is the inverse relationship of bond price versus bond yield.
Okay.
And also the short term means that what is your feeling about short-term outlook?
Okay, it's a little bit challenging to understand it.
Yes. Maybe someone is already sleeping. Yeah. So okay. It is, yeah, it's definitely a sentiment that says that if I'm bullish on long term, then therefore I buy into longer term yield. So they are looking much further away from the current outlook. So the current outlook, short term one, they are looking slightly negative, so that they are offloading. Yeah. So that is the whole idea here.
Okay, I see. So if there is a recession coming following this
Indicator, yes.
so what kind of sector or investment opportunity we can look at under these situations, like for both Malaysia and also US market?
Okay, so we have to understand that if recession really happens, then we will just go for the needs of things. So for instance, are you still using a phone in the recession? Are you still using water at home?
Cannot live without water,
Yeah, are
right?
you using electricity? So those are the things that is very mature and you need. And I think this is a segment under so-called telco and utilities. Telco is one sector, utilities is one sector, but this comes hand in hand because they are considered as recession-proof. And also another thing is that sometimes during recession you go for you go for drinks and whatever because you don't have a job, you drink more sometimes. Then maybe you can also consider. Yeah, maybe that time you can even consider as this brewery sector as a recession-proof sector. Okay, I mean just a joke, but yeah, but
So what do you think? How
yeah,
you
yeah.
think it?
So I think during pandemic you drink more of the liquor at home, but again, what I'm trying to say is that it can be still growing. I mean, in terms of breweries, they can still grow during that kind of period, but maybe at a very minute way of growing lah. Maybe milder growth or whatever. But definitely right now we are in a reopening path and things like that. So things are still rosy for us. I still think that for brewery sectors, definitely when there is reopening, when there is more spending, they will go up. But just now that is a joke. When recession comes, you will drink more, but the sentiment will sell the market. Sell the shares first.
Okay.
Sentiment and also the reality is different.
I see. Okay. So again, if you have any questions, you can put in the comment section below, and we'll take them from there. So I guess while waiting for you guys to put in questions, I guess there's some questions on the sector. Yep. So talking about the USD, right? You mentioned the USD is stronger compared to pre-pandemic. So does it mean that it will benefit the export-oriented companies in the local market? And can you give us some example? And also, how about US company? What does it mean for the US company?
So for USDMYR kind of trend, the US dollar is stronger, benefit us. So when ringgit is weaker, it benefits the exporters. Yeah, ringgit weaker means USD stronger in Australia, right?
Okay.
Yeah. So that's the first thing. So if we want to use this approach, must also couple with whether their earnings are growing. So during this period of time whereby ringgit is still quite weak, but you can see that our exporters didn't really benefit much in terms of the share price or even of the earnings. So earnings part is also something that you have. So I think it goes hand in hand. Say that when the ringgit is actually on a weaker path, it generally will benefit the.
Okay.
But if the earnings are still very flattish or going downtrend, maybe people don't buy their products, therefore they don't have revenue or earnings, then it will affect their share price. But during I think during 2015 and 2016, we noticed really when the ringgit weakened so much, benefited our furniture related counters and also the gloves.
Okay.
So these are some of the pointers that you in for investors. I think actually all these.
Okay. That means that two sectors are actually fulfill your. You're saying about the U.S. dollar stronger is not a single factor that we should look at.
Yes.
Yeah. Okay.
Okay, I think we need to take a break.
Okay.
So yeah, welcome back. I think just now we have some technical issues. I saw someone saying that my voice are breaking and my voice are not clear. Anyway, we cleared that off. We can go with the Q&A.
If you can hear us clearly, can you put like okay or thumbs up under the comments so that we know? Yep, so maybe we'll continue with our questions just now. So I was asking Loui about like the stronger USD compared to pre-pandemic. Like what does it mean for the Malaysian company and also the US company? So so Loui was saying, yeah, now better. Okay. Thank you for your comment. Yeah, so Loui was saying the stronger USD cannot be a single factor that determine the outlook for the Malaysian company.
Yes.
So I have to combine with their earnings and also their underlying business as well. So how about for the US company?
So it is very challenging for US companies right now because US companies, US corporates are always, around the world, right? So they receive all this foreign currency into their books, and therefore, to me, they are having a very challenging time to, hedge with some forex, whatever it is they need to do in order to bring back, towards. It is challenging for them because they need to bring back, and if the revenue is lower, earnings is lower, then it will affect their earnings. So that is the whole idea here, because if they are too strong in terms of their US dollar, then it will affect their earnings in a way. Okay, so people will buy less of their products and things like that. So you have to think in that manner, because if USD is very strong, would you want to buy a USD kind of product? Or maybe you can have a better choice buying into China products or whatever products. So those are the ideas behind a currency when it is moving stronger or weaker. People will think, people will rethink of their spending mentality or whatever it is.
I guess it has to be like similar to what you said just now. It has to be combined with their underlying business as well, right? If Apple product is too good, very good, then if US dollar is like very high, then I will still buy.
Yes. I guess you're buying into quality stuff, then you wouldn't mind paying the premium for quality stuff. So I'm not saying that it is a determining factor, but I think most likely if you're buying into some good products, you need not to think about the currency itself. You can just straight buy into it as long as it is good quality. So I think technical issue. Okay, yeah. So I guess ultimately, can you hear me right now?
Can you hear me? Can you hear us?
Can you hear me?
Can you hear from Loui?
Hello. Okay.
Okay, I think that's fine.
Yeah. So again, like I said earlier on, it's about the quality, and therefore, So in the US as well, a lot of companies are good quality companies. So they fight into the top 10 companies in the world. So in top 10 companies, there are about 9 companies is US corporates. So that is the whole idea here. So I think They are good, so that is why people buy into their stuff and earnings grow, and that's why the market cap grew together as well.
I see.
Yeah.
Okay, so that's about the stronger US dollar. Yep. So another sector I'm curious is the traveling sector, because you mentioned about the China recovery and also the reopening. So would it benefit our local and also maybe Hong Kong traveling related sector?
Yeah, maybe we can
Yeah.
maybe we can do some checking here. Yeah, in the app itself.
Yeah, can we bring up the screen?
Yep. So let's say we believe that the Hong Kong is like looking at a similar path after our April reopening in Malaysia, and it benefited the AirAsia or Capital A. Can we also find some opportunities within Hong Kong?
Yeah, that's right.
So if you look at that, perhaps you want to look at Cathay Air, whether they are at the bottom, they have a chance to turn around in the next quarter. So perhaps that could, based on what I understand from AirAsia, is that during that period of time, it is still hovering below the SMA 200 zone, and then it surged through the SMA 200 and surged higher for I think maybe 60% return within that 3 weeks. Okay. So if similarly we have this Cathay Pacific Air hovering around 8 Hong Kong dollar. Yeah.
So before that, this Cathay Pac Air is it an airline company as well?
Yeah, let me check. Okay, it's under the overview itself, profile overview. You can see that Cathay Pacific Airways Limited. Yeah, they are scheduled airline services. The group is engaged in other related areas, airline catering and whatnot. Okay, so based on this, the main business you can see from the app itself is very easy to go into, and straight away you can know what is this company doing and where are they located. Yeah, all these will be on your
profile.
Inside the company profile overview, and this is within the M Plus Global app, so that is very, very easy to use and very user friendly to find out what information that you want. Okay, so coming to the let's say financial part, I think right now it's still negative. It's very, very similar to what happened in AirAsia before the rally, and so if we can use this kind of knowledge in Cathay Pacific, okay, so if we use this kind of knowledge to relate back to, we know that our site has reopened from April onwards last year, and AirAsia has returned to operating profit. This can be also another similar industry kind of catalyst, that if this can turn around into a profitable company in the next quarter, then perhaps this has a chance to maybe rally above at least the 8 Hong Kong dollar level. So right now it's trading at 760. Yeah.
The 884 is it?
Eight Hong Kong dollar, because that is the first line of defense of the SMA 200. And then if we go up to 884, that is during December 2022. Yeah. So I guess this is one of the ways. I think during that time, why that the Cathay Pacific surged from 705 this point to this during December is because they are already seeing China reopening. That's why they trade ahead of the event.
That was during.
Yeah, so it's like November to December, the China government said that they are looking at reopening of activities going forward. So officially, they reopened during 8th of January. Okay, and after 8th of January, and after that, the share price has fallen. So this could be a buy on rumor, sell on news kind of movements. Okay. Yeah. But to support the share price going forward, it needs earnings. So like similarly like AirAsia, also after the earnings has turned around, and we can see that the share price move up higher. Yep.
So you mentioned that buy on rumor, sell on news.
Yeah.
Yeah. Can you elaborate more, like what sort
Yeah.
of rumor and what sort of news they
Okay,
react to?
so for this case, for this China reopening, they actually wanted to reopen, after the what do you call that? I think October. Then during November, they start to say that, oh, they have plans. What sort of plans they are looking at. But before that, they don't have any plans. They don't have any plans. They don't have anything. They say they continue lockdown. But a lot of noises comes from the grassroots and say that the population of the masses wants to reopen because it's very struggling on their part. So that's why the reopening path can be also be seen in the news from October, November onwards.
Okay.
And therefore, after that few months or few weeks, a lot of news media has been covering that, say that, oh, China is going to reopen, they have plans and things like that. So that was a point of time where they have rallied from this 710 or 705 zone towards the highest point near towards the 893. Yeah.
Wow.
Yeah.
That's a
So
lot.
yeah, and after they have announced they finally reopened, and the share price has tanked from that point. But in fact, this 705 to 893, it doesn't show any earnings yet. It doesn't show any earnings yet. So that is why a sentiment-driven play like this can also be one of the strategy. Means you buy on rumors, but you sell after news. So so this is one of the strategy. Yeah.
Okay. Let's see how the share price goes after this, right?
Yes,
Now it's 760.
Yeah, provided there is a strong earnings coming from the next quarter. Yeah.
Okay. Yeah, but again, this is not a buy or sell comment, disclaimer.
Yeah, I'm just trying to relate, once there is a recovery in terms of the earnings for Cathay, then perhaps it could be something similar to AirAsia. Because this is a delayed effect, because China reopened later, we reopened earlier, we have the experience before, and therefore if this experience can mimic in Cathay Pacific, that could be one of the strategy that you can use.
I see. Yes. Okay. That answer my- Yeah, I guess another sector. Yeah, I guess there's some room for growth in traveling sector, I guess.
Yes.
Yeah. So across like all sector in S&P 500, right? It seems like just now you mentioned the consumer discretionary has most of the company in the sector actually beating the expectation.
Yes.
Percentage very high. So but we also mentioned the recession might come. So do you think that is still a good sector to look at?
Consumer discretionary. Okay.
Yeah, like
Yeah. So LVMH is very, very amazing in a way. Let's see whether I can find. Okay, I couldn't find LVMH here. But at the same time, if we are looking at consumer discretionary products, it is more skewed towards all these like in Malaysia we have T20, so it's skewed towards this wealthy population in a way.
Yes.
Okay. So and if we look into wealthy population, and if we look into this kind of consumer pattern, consumer behavior, it is definitely jive in well with the topic or the theme of the China reopening. Okay. So if China reopening comes in, I think they have a lot of pent-up demand for that, because during the pandemic itself, they can't really spend too much.
Yeah.
But right now, they really will spend. I think this could be another wow factor for LVMH. So if that is the case, then consumer discretionary, because it's discretionary, is for wealthy people, and it jive in with this reopening theme. So I think recession will, if there is any recession, it may be a very so-called very light or very swift recovery from that point. So it wouldn't hit us too hard, too long for the recession, but instead it will be like touch and go kind of recession. So what I want to point out here is that consumer discretionary, because of this reopening of activities in China, consumer discretionary can still sustain. Okay, regardless of this recession.
Okay.
Yeah. Okay.
Okay.
Yeah.
I see.
Yep.
Right. I think there's another questions here. You mentioned commodity price.
Yep.
Yeah. It's like might still in now downtrend move, but it will remain elevated.
Yeah, because if you compare to, I think pre-pandemic, I think our oil prices is still quite high.
Now
And
it's like 77.
yeah, $77, and I think it should remain elevated for some time. And a lot of people are trying to push down the crude oil prices.
Yeah.
Basically, they are fearful of the recessionary fearful of the recessionary period.
Yeah.
But at the same time, I think crude oil and oil-related products are still ongoing. You still need to use, like although electric vehicle is booming, but actually we still need a lot of mining activities is still ongoing and things like that. So I think even machineries out there in factories, they're going slightly greener, but they still need to use the fuel to operate. So what I mean here is that it still will be elevated because there is also one factor from OPEC Plus that can actually reduce the production to maintain the price. So that is another factor. But again, people are trying to push down the price. Thinking about China reopening is not going to affect them. It's not going to use more
economic slowdown.
Yeah.
Expectation.
So I think in a way, what I'm trying to point out here on the commodity side is that it will still remain elevated above at least $70 mark, and that is actually above the pre-pandemic level. Yeah, if I'm not mistaken, let me check back here.
It will be like.
Hold on a second. Let me check. Yeah, during 2019, it's around 61. Yeah, it's around 61, 2019, throughout the whole year. So right now it's 77. So I think it should be hovering around this level. It will not go back to the Ukraine and Russia, tension, that kind of pricing about 120 and above.
Yeah,
but
that's crazy.
Yeah, and if we're looking at CPI, moderating, this is also telling us that demand is slowing down and CPI is coming down. So it should be on this path, but it shouldn't go too low, below the 70. That is my point of view, because I think there is a lot of activities out there are still ongoing to use up fuel. Yeah. And therefore, reopening of all these factories out there will still needs to use the fuel. Yeah. So I think it should be standing around here. And the fact that OPEC Plus is having this surprise move, like I think 2-3 weeks ago. Yeah. It's definitely
cut the production.
Yeah. It's actually, I mean, it is favoring them, right? Because when they cut production, they can sell at a higher price. Yeah. So they can always do this kind of surprise move going forward and make sure they maintain the they call the stability of the price in favor to them, because they did not enjoy the benefits of pre-pandemic. Yeah, so that's why right now, if they have an opportunity, they might continue to do this supply move to reduce the supply and make sure that they maintain the stability. So I think this can be one of the direction going forward for OPEC Plus, and hence I think this will maintain a price about $70 and $80 per barrel mark.
I see. So if that's the case, would you say that this will benefit the oil and gas or energy counter as well?
Yes, it may benefit, but depends on relativity. Always you must think of market as a relativity, because last year is better, right? Last year it went up to 120.
Yeah.
This year, yes, it is good, but comparing to last year, would you think it's better?
Of course not.
Yeah. So it depends on relativity. So always you think about market, you always think about relativity, and always think whether last year is better or this year is better, last quarter is better or this quarter is better. And to produce your thesis, to come up with your thesis of buying into oil and gas, why do you buy into oil and gas? You need all this, which means that you need to compare first of all whether the oil price is higher or lower first. Yeah, if last year is higher, this year is lower, then you should, although they are making good money,
Yeah.
but analysts always will think, or investors always will think, whether is it better than last year? If yes, then only they will put in money, right?
Yes, but can someone also think in a way like they are not better than last year, but actually they are better than pre-pandemic?
Yes, but you need more time to manifest that value out in a way, because to me, investors or traders are very short term kind of time frame kind of people.
Okay.
Not many people can be Warren Buffett to buy into Occidental and hold on to that kind of position. So you have to think of your objective right now. Are you trading it for the next quarter, or are you trading it for the next 5 years or 10 years? Then you have to know. But if you're looking at if it is above pre-pandemic level, definitely you can buy into it because earnings should be better than pre-pandemic, demand should be better. But at the same time, we have also this recessionary risk as compared to 2015 or 2016 or 2019. So there are a lot of factors affecting your decision making. But at least for me, I will be thinking that if this quarter cannot be greater than last quarter in terms of earnings, the near-term movements will still continue to be either flat or negative for oil-related counters. Yeah, so they must deliver. The management must deliver in terms of the company. They have to deliver the earnings in order for the share price to move higher.
Right. Yeah. So we have to look at the earnings as well to compare with year-on-year and also Q-on-Q basis.
Another thing is that if I'm thinking that the range will be 70 to 80 and will not go up anymore, there is no impetus for the earnings to come in. So so if you have to compare, first of all,
be flat, right?
So if you compare Q on Q year on year last time, that gives you the understanding that whether you should be buying or not. But at the same time, if you think that this oil price is going to be stagnant around 70 to 80 and don't move up from this range anymore, then your upside reward will not be as good. Yeah. So always think relative and also forward thinking.
So we have to look at both sides of the price.
Yep.
Okay. I learned a lot from that.
Yes.
Okay, so I think it covered
Is
most
there
of
any
my
more questions?
Yeah, is there any
Maybe
questions
from the comment section? No more? Okay.
Yeah, can we look at the Facebook and also YouTube? Is there any comment? Yeah, so while waiting you guys to put in comment, guys, don't be shy, okay? This is the opportunity to ask from our expert, Loui Low.
Yeah, we have another 7 minutes more maybe. Yeah, okay.
Okay, so while you guys putting in questions, maybe I can ask a few last questions.
Yeah, last question, I think.
Last questions, Because nowadays, everyone is talking about the ChatGPT, the AI thing. So, but the Nasdaq is still below the 12,000 psychological level. Yeah, so it seems the market is still cautious in the technology sector, maybe because of inflation or other things. So, can you share your view on the technology sector? How would you look at it?
Before that, I think we can look into the GDP first. I will answer your question later on. The breaking news just came in. So 8:29. 8:30 just now. So breaking news: US GDP in Q1 falls short of expectation, rising only 1.1%. So this is the type of news flow that you might want to trigger what sort of direction that you want to go in. So this definitely is like slowing down after 2.6 last quarter. So perhaps this is a slowing down sign, and that gives you an idea of maybe you should go more defensive. You can go into utilities and things like that. So again, you can get live news from the global app. So it's very, very useful. Okay. So
you just search GDP.
Yes, exactly. So whatever you want to search, you just put into our search function. It can go through all of these quotes. You can go to news. You can go to help. So so all these are available in our app. Okay, so talking about the AI or even the ChatGPT things, artificial intelligence. So maybe you cannot find AI, but you can find artificial intelligence. So if you put in artificial, then it will come out with RoboFund, robotics, artificial intelligence, direction, artificial intelligence.
I thought there's some ETF as
Yes, all these are likely to be ETF because all these are likely to be ETFs. And you can actually use this to check out whether what company they hold into. So by pressing maybe ROBT, you can check through profile and constituents, see whether they have any information underneath this. Wait, let me check. No, wait, maybe I can go into another one. Okay, so this has constituents. So yeah, yep. So this is what is this called? iShares Robotics and Artificial Intelligence. So these are some of the constituents. May2, Hello Group, Sumo Logic. Yeah.
Okay.
Yeah.
So
correct. So they can do their own allocation. This covers 75% of their constituents is under technology. Then other than that would be some other sectors that is less than 5% or 6%. Yeah. So I think all these are available in our app. You can actually track them down. But if you want more information, you always can go Google or wherever it is. But certainly to point towards your direction of this ChatGPT or even artificial intelligence kind of trading team, these are some of the options that you can choose from. But whether they are, whether they can buy into it right now, you need to also use technical analysis to pinpoint to the buying entry. So what I think is you have to have both things. One is the fundamental part and one is the technical part. So fundamental, you have the team, but also you must understand whether they have earnings. And second thing is that you have to understand whether is it uptrending, is it rebounding, and only for looking at the chart. So if you are looking at the chart right now, the RSI seems like a little bit oversold, but it's not all oversold yet. Perhaps you still need to wait a little bit more time before it gives you an opportunity to get in. So for the time being, I think it is more driven in the negative side of things. At this point in time, I don't quite like this chart because it has been forming a double top formation here. Okay, these 2 points, 1 and also 2. So this double top formation, and it is quite nearby towards this level here, which is the support, which goes down to maybe 29.20 before rebounding. So maybe one of the ways is that I can wait it until the SME 200 level, which is 28.74, 75 level, before going in. Yeah. So these are some of the ways and some of the rules that I always use to find whether is that any rebound formation, then only we enter.
I see.
Yep. Okay.
And this is about the TH and Q.
Yep. Okay.
Okay.
Okay. 2 more minutes to go.
Questions from the audience or our friends?
Okay, I think everyone is good. Everyone is a good listener today. Okay.
Okay. So shall we call the session to the end?
Yeah, I think we have done a very good session. Yep.
Yeah. So thank you all for attending today's live stream. So we hope you found it insightful and also informative. Once again, I want to thank our head of research, Loui Low, for sharing a lot to us today, like the market outlook, and we talk about a lot of sectors like the commodities, traveling, technology, and others as well. So thank you, Loui, for sharing with us.
No problem. Thank you so much, Wei.
Yeah. So before we wrap up, I just want to remind you to download our M Plus Global apps, which you can scan over maybe left or right of the screen. Yeah, it's over there.
Yes,
you can scan this to download and register. So why should you download now? Because we have a campaign right now. So if you download and register, open an account and deposit a minimum 10k ringgit with us, you can claim 5 Grab share. So other than that, we also have, you can also get a real-time quote for US and also Hong Kong stock market for 30 days. Yeah, and then during this very special launching period, you can also enjoy 90 days free US real-time market data. Yeah, it's from our Nasdaq, and we are the first Malaysian stockbroker who offering that. So I guess that's all for today.
Yep, thank you so much.
Yeah, thank you so much. Good night.